Okay, good morning everyone. So today we're going to look at chapter 6 on budgeting. Alright, at page 70. Okay, here, for budget periods, budget period refers to the degree of accuracy, that be applied by management to forecast the operations of the company. Taking into account, seasonal fluctuation, stability of industry, and so on. Right, a popular time frames for budget is 12 months periods divided for control purpose into 12 monthly or 13 for weekly budget period. So budget period may of course coincide with the accounting year of the company. All right, and here it says two factors should be considered in determining the budget period. Right, first is the type of business, and second, control aspect. Right, so here it says budgeting is the act of preparing the budget. Okay, next we goes to administrations of budgeting procedure. It says here, it's a normal for a company to set up a budget committee to coordinate the preparations of functions budget. Functionals budget, and this committee, referred to budget committee, will be responsible for overall policy matters relating to budget. The members of budget committee include top executive, such as, here it says the chief or senior accountants, the chief engineer, the sales manager, the production manager, the personnel manager, and also the executive manager. Here it says, the functions, for budget committee. First, to coordinate the preparations of budget. Second, issuing timetable for the preparations of functional budget. Third, allocations of responsibility for the preparations of budget. Fourth, provisions of information to assist the preparations of budget. Fifth, communications of final budget to appropriate management. And sixth, continuous assessment of the budgeting and planning process in order to improve the planning and control functions. Right, next we look at page 71. Here it says, one member of the budget committee will be appointed as budget officer. His duties includes here establishing procedure for the submissions of financial budgets for approval by the committee. Coordinating activities if different functions. Alright, acting as liaison officer between departments head. Providing manager with such information and may assist in the preparations of functional budget. On acceptance of budgets by the committee, the issues of budget statements to functional manager identifying their budget targets. Preparing cost comparison statements, identifying actual result achieved against budget, and preparations of budget manual. So that is all the duties for budget officer. Next here, for budget manuals, will indicate first which budget must be prepared, when should the budget prepared, and from which budget period, which is responsible for preparing the budget. Alright. Second, what each functional budget should contain. Third, procedures on how to prepare budget and the standard form to use and the objective of the business. Next we look at principal budget factors. Here it says at any point in time, there will be one factor, either internal or external, which limits expansions or output of a company. This is known as the principal budget factors, of principal limiting factor. Alright, now we look at functional budgets. Functional budget says here, a budget of expenditure or income, for expenditure or income for individual functional of a business. Functional budget includes the following budget. So here we have the sales budget, the productions budget, cost of goods sold budget, the selling and administration cost budget, capital expenditure budget, plan utilization budget, and cash budget. Now we look at sales budget. Alright, sales budgets represent the planned level of sales in terms of quantity. Alright, multiples which value. Here the sales budget is the base form which all other functional budgets are prepared. If sales budget is not done properly, the entire master budget will be worthless and waste of time. So here it's emphasized the importance of sales budget. Alright, In order to determine and forecast the quantity, management may require information on the quantity and value of past sales, the general market conditions, market research and salesman estimates, regulations and current fashion trend, alright, the positions of the company within the industry as a whole, prospective pricing policy, advertising and product informations. Okay, so sales budget here, given to you is the formula. Okay, forecasted sales units, multiple with selling price. Okay, this is the formula. So here, if you look at examples 1, okay, the information, the following information is provided. Okay, the product, there are 2 products, okay, and then there are 3 months. Okay, here is the forecast sales unit. Okay, so and then given also the selling price. So here, the questions ask you to prepare the sales budget for 3 months ended 31st December 2019. So how are you going to prepare the sales budget? Here, so here is the sales unit. Alright. So there are 3 tables, for 3 months, October, November, December. Alright, and here, there are 3 columns also, indicate the sales, the units, the selling price and sales value. Alright, so it's just a simple tables where you take for October, there are 2 products, alpha and beta. So this is a forecast unit for alpha and beta, for October. So you multiple with the selling price and you will get the forecast value for sales. Okay, so that is how you prepare the sales budget. Okay. Okay, next we look at productions budget. Alright, here it says, the productions budget represent, the quantity of product to be produced or manufactured. The quantity of product, influenced by several factors, here such as the quantity of estimated sales during the planned period. The quantity already available, which refer to manufacturers, product manufacturers from previous periods, also known as opening stock, and then the quantity required as closing stock. Okay, the productions budget is based on sales budget, but modified to accommodate in stock health and stock occurrence of normal losses during productions. The productions budget is important because here it says, it enable manager to forecast total product requirements. It provide a basis from which other budgets are prepared, such as the material requirements and cost budget and other budgets. It allows management to measure planned activity levels of factory. Where the management will be able to know if there is excess capacity in the planned period for the other project. It can also be used in estimating cash flow and working capital requirement. Alright, so here, next, there are formula. So production unit or budget, equals to sales unit, plus ending stock, minus opening stock. Now it says here, using informations from the example plus the following informations, prepared a productions budget for the months of October and November. So refer to example 1, in the previous page. So here it is the additional additional informations, where for product alpha and beta, stock as at, so here is the opening stock. As at 1st October, alpha ada opening stock of 200 and beta is 800. So here it says, the company policy requires that stock of finished good at the end of every month must be 10% of estimated sales unit of the following month. So from these informations, you are required to prepare a productions budget for the months of October and November, right? Here it shows to you, the solutions for productions budget. There are 2 columns here. They are for October and November. For both product, alpha and beta. Here, right? You just take the budgeted sales units for alpha and beta. For October and November. This is given to you in examples 1. You just take it, and then you plus with closing stock. Alright, so how you get 320? Where 10% multiple with the budgeted sales unit of alpha in November. All right, since okay the questions are okay state that okay the closing stock okay must be 10% okay of estimated sales unit of the following month. Okay, so there, all right, so 10% multiple with 3,200, okay, the budgeted sales unit of alpha in November, so you will get 320, okay, as a closing stock okay in October. Okay, same goes with beta. Okay, 10% okay multiple with okay 4,800. Yeah, okay, so you add up okay these two, okay, and then you minus with opening stock. Okay, this information is given to you, okay, 200 and 800, so you will get the total productions in unit okay for alpha and beta okay for October. Okay, now we look at November. Okay, so here the budgeted sales okay in unit is given, okay, 3,200 and 4,800. So the closing stock here okay is a 10% okay multiple with budgeted sales unit of alpha okay in December. All right, okay, in December 2000 okay 2,300. Okay, so you will get 230, and same goes to beta. Okay, 10% multiple with 5,000. All right, and then okay you add up okay this value, and then you will minus which opening stock. Okay, here okay how you get this amount. Okay, the closing stock for October okay will be your opening stock okay for November. Okay, you just take the value and then you minus okay so you get the total productions unit for November. So that is how you're going to prepare the productions budget. All right, so you must remember the formula. Okay, for productions budget okay we take the budgeted sales okay plus which closing stock minus with opening stock. Okay, all right.